So it looks like 2020 is going to be a year of record-setting things in the housing industry, housing market, whatever. Looks like we just set another record again. This time it's with home flippers. That's what we're going to talk about today. So welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Today is the 18th of December. Randy Patrick here, putting the realism back in real estate. So we're going to get into it right now. Yet, as I said, everything seems to be having records these days with respect to real estate. We have record low interest rates. We have record low inventory. We have record, I guess you could say, housing values or year-over-year housing value increases. So it seems to be growing and growing. And today we're going to get into home flippers, what they're doing right now in the records they're setting with respect to their profitability in the housing market. So first of all, if you're not already a subscriber, if you could please smash the subscriber button, help my channel grow, I would really appreciate that. So thank you very much. All right, let's get it on here, guys. So basically today we're going to talk about profit for house flippers. Basically they reaches a new high. That's the deal. Okay, so obviously flipping, you're buying, and you're reselling. There's different definitions of flipping we'll get into, but really it's basically you buy and you sell and you're making money. That's the key to this endeavor here. It's pretty much why you do it. You're picking up the stressed property or discount and off you go. Now, why does this make sense and why can we marry things up here to this could be a profitable business for people to get involved in real estate investing, just even owning a home? Why? Because we're going to have 1.8 to 3 million foreclosures. They'll be available starting in 2021, going for a couple of years, maybe to 2024. I didn't make that statistic up. That's coming from the folks at auction.com and various webinars that I've attended. It's actually been in print as well, too. So that's real information. That's real data. It's been talked about in the media here. So what do you do with these properties? Well, you flip them, you fix and flip them, you cash flow rental them, they become income producing properties. And a lot of you have asked questions, or you may have heard, other podcasts or other real estate investors talking about what's called the BRRRR method. So what does BRRRR stand for? It stands for buy, rehab or renovate, rent, put a renter in, refinance it, you're pulling your money out, and then you repeat it. So the money you pull out, you just reinvest on their property, or you can make it a retail deal as well too. Live in it yourself, sell it retail, whatever you want to do. So the whole point is that we're going to be, you can see how the home flippers work. The opportunity will be increasing now with respect to these foreclosures that will be coming on, and that's what we should all be looking at. All right. So essentially, Adam Data Solutions puts out the information, which is really nice of them. Home flipping continues to decline across the U.S. in third quarter of 2020, but profits reach a new high. So here's the dichotomy of the market. So the amount of flipping is going down, clearly because of the lack of inventory and or because when prices rise, real estate investors or home flippers may not be buying as much as they used to buy because prices are rising, not as much margin or risk, more risk involved. However, the ones that they are selling are going at record highs now, you see. So I think, we're seeing a lot of new records happening here, and this just kind of proves that stuff's going on here. But to define flipping, so Adam Data Solutions analyzed sales deed data for this report. Single family home or condo flip was any arm's length transaction that occurred in the quarter where a previous arm's length transaction, the same property, had occurred within the last 12 months. The average gross flipping profit is the difference between the purchase price and the flip price, not including rehab costs and other expenses incurred, which flipping veterans estimate typically run between 20% and 33% of the property after repaired value. So gross flipping return on investment was calculated by dividing the gross flipping profit by the first sale purchase price. Okay, that's how they're defining flipping. So basically you bought the property in February and you resold it in October, okay? And you did something to it. Maybe you did, maybe you didn't. If you improved it, you put money into it, and then you bought it for 100 and sold it for 175. The difference is your gross margin right there. And as they mentioned, we're talking gross profit here, so buying and selling the difference. We're not talking rehab costs, holding costs, utilities, cost of money, whatever that is. So again, the better flipping groups and people, their true net revenue or net profit or margin will be good, whereas some of the newbies will struggle with that a little bit just because it takes time to figure stuff out and to get the contacts down and get the process down. So, but the point is this is how they define flipping. Now, some people, this is kind of a generic flipping. I mean, there's a lot of wholesalers flip, and what I mean by flip is they basically put it under contract and they sell it, within 30 days, and that's also defined as flipping as well too. But for the purpose of this discussion, we're talking about doing a flip within it's bought once within a 12-month period. It's been bought and sold. Okay, that's how they want to define that. All right. Okay, moving on here. So we're talking about Atom Data Solutions, and what it boils down to it is that we got I guess you could say, based on the situation, which is less inventory, people competing for properties, etc. Basically, the situation that we were in with COVID and the whole real estate cycle here, it's pushed the typical gross flipping profit to 73,766 in the third quarter, translating to a 44.4% return on investment compared to the original acquisition price. The gross flipping ROI was up from 42.9% in the second quarter of 2020. So that's actually interesting. So again, when we're in this tight inventory situation, we see the fact that people who are buying and selling homes as a business or if you're doing a couple here and there as a hobby or way to earn extra income, they're hitting record profits. So apparently this is the best number that basically has been out since 2000. So the gross flipping margin is the best since the year 2000. So that's a new record, I guess, literally for the flipping people. So good for them. Home flipping generated higher profits on less transactions across the U.S. in the third quarter. Investors continue to make more money on a declining number of deals. So again, they're basically saying it's I guess you could say it boils down to COVID and housing market, a lack of inventory, things like that. So it's funny how things are trending in different ways. You're less flipping volume, more flipping profit. So it seems to make sense given the current environment. All right. So home flipping profit trends, you can see that the actual gross, the gross profits up and gross return on investment is up as well too. The green line, you can't really see it too well there, but you can see both up and we're talking records because you can take a look at the previous high that was last quarter and then looks like back in 2017. Obviously, it's grown since the last housing crisis or before that, but you can see we've hit some pretty big numbers there. So that's your biggest return on investment, not return on investment, your biggest gross flipping profit right now. All right, so flipping trends, this is interesting because you can see that, as far as the volume was down a little bit, and as a percentage of all sales, it was down as well too. So depending on the timing and the season, the cycle, flipping or flip properties will, contribute to, the properties that are bought and sold in the open marketplace. So it looks like it's up and down as far as the flipping rate as a percentage of total sales. But, it looks like the past couple of months, the actual amount has been kind of steady, all right, which is interesting. Okay, guys, so flipping rates down in more than 90% of local markets. So essentially, home flips as a portion of all home sales decreased from the second quarter to the third quarter, and majority of 148 of the 159 metro statistical areas that they look at here. So among the metro areas, the largest quarterly decreases when home flipping rate came in Killeen, Texas, down 44.5%. Savannah, Georgia, down 43%, York, Pennsylvania, down 42%, and Greeley, Colorado, down 41.5%, with Springfield, Massachusetts, down 39.8%. So that was your basic, the largest quarterly decreases in the home flipping rate. The biggest quarterly flipping rate decreases in areas that have a population of 1 million or more were Raleigh, North Carolina, 39%, Atlanta, down 38.5%, Kansas City, Missouri, down 38%, San Diego, down 38%, Rochester, New York, down 37%. So places that had the biggest increases: Davenport, Iowa, Hilton Head, 18.5%, Hilton Head, South Carolina, 16.8%, Scranton, Pennsylvania, Dunder Mifflin Place, I guess, 12.2%, and Amarillo, Texas, 10.9%, and Kalamazoo, Michigan, up 7.7%. So interesting that some locations we're seeing decreases in rates just because of volume. Other locations, which these are not maybe the big players that we're talking about, but they're still showing some increases. I guess it depends on where people are moving and how they're dealing with price points and COVID and stuff like that. So typical home flipping returns rise in 2/3 of the market. I'm not going to get into it too much here, but the whole point is that you can see that when you have a gross flipping profit of over $73,000, above the median investor purchase price of 166, that's pretty good number. The gross profit figure was up from 69,000 in the second quarter, and up from 61,800 in the third quarter of last year. So we're seeing quarterly increases and year-over-year increases in gross flipping margin, profit margin, etc. So basically, the biggest annual increases for flipping profit margins, were in the big properties. Were Raleigh, North Carolina, up 74%, Phoenix up 69%, Kansas City up almost 56%, and Vegas up 54%. The biggest declines in home flips in the quarter were Corpus Christi. I guess you take declines in return on investment. Corpus Christi, Texas, down 77%. Hilton Head, down 72%. Boulder, Colorado, down 69%. And Wilmington, North Carolina, almost 60%. And South Bend, down 54%. So, again, we're having to watch. That's declines on investor returns, all right? And so again, returns, profits, whatever you want to call them. Okay, so it's interesting to see how certain locations are just booming. So for example, it looks like markets with the biggest gains included Brownsville, Texas, return on investment up to 183%, Austin, Texas, 176%, Waco, Texas, up 157%, Springfield, Massachusetts, up 145%, and Savannah, Georgia, up 143%. So these are the locations that are seeing the hugest increases in margin. A lot of them are in Texas, so it looks like a lot of people are moving to Texas and maybe are not going to the Dallas, Fort Worth, or Houston's, but to other locations as well too. So again, you can have bigger numbers when you're starting off from a smaller number, clearly. So we got to keep that in mind. Again, just everything's kind of rising here. So it's almost like the median resale prices on home flips in the third quarter were at least twice the median investor purchase price compared to a year earlier. So in 14 of 159 of the metros with an updated analyze. Okay, so again, I'm not going to get into all the details here, but you can see what's happening. So the numbers are changing. Highest raw profits still in the west and northeast, and lowest in the south. So basically, that's where things are more expensive, they're going to be more expensive, right? So the the highest third quarter 2020 home flipping profits measured in dollars were again concentrated in the west and northeast. Among the metro areas enough data analyzed, 22 of the top 25 were in those regions, led by San Jose with a gross profit of $290,000, Ventura, California, the gross profit of $180,000, Bridgeport, Connecticut with a gross profit of $177,500, Los Angeles with a gross profit of $161,500, and San Francisco with a gross profit of $158,500. So in those locations, we're looking at, number one, your home values to purchase are higher, number one. So you're probably going to see obviously a bigger, if there's good improvements made when people are doing the rehab to the home, they're going to get more for it. And also I look at Bridgeport, Connecticut. I see that as a location that people are probably leaving the big city of New York for and hitting the Connecticut area. So you're going to see some more money coming in to that area as well too. But just when you take a look at that, so people who are looking to do some fix and flips, you know what? I got the model. We'll show you and how it works. But essentially, some of these California locations and Northeast locations, pretty big numbers out there for sure. Now, among the markets analyzed, 17 of the 20 posted the smallest home flipping profits. The third quarter were spread across southern metro areas, led by Corpus Christi, almost $15,000 in profit. Hilton Head, South Carolina, $24K in profit. Killeen, Texas, Killeen again, about $26K in profit. El Paso, Texas, about $27K in profit, and Lubbock, Texas, almost $29K in profit. Now, realize that in these locations, your cost of acquisition is a lot. So your profit's not huge, but as a percentage, because then if we recall a couple slides ago, Hilton had a good profit increase. So it's all relative, I guess, to your basis when you start off here. So just interesting to note that. All right, home flips purchased with financing or cash remain about the same. So essentially, not much, pretty much the same. There's flippers who will look for financing for sure. There are flippers who will use cash. So it depends on how it works, your size, your scope, your risk tolerance, etc. So that's it for sure there. All right, let's go to fix and flip financing trends. As we can see, this just shows the total finance purchase dollar volume has actually gone down. The reason being because we're seeing less flips out there. But and you can see that the percentage purchased by flippers with financing just had a little spike as well too. So up and down based on the marketplace. All right, average time to flip a property nationwide rises to 192 days. So typically we've always been in that 180, 185 day range. So the latest number is up from an average of 184 days in the second quarter of 2020 and 176 days in the third quarter of last year. So we actually increased a good, 8 days or so from last quarter. Now, really, we're talking this average time to flip. You got to go from acquisition. So you bought it on day one, you did all your rehab, you put it up for market, you got it under contract, and you actually went and closed the transaction on day 192. So that's how this kind of plays out here. So it just goes to show that the average flip transaction is just over 6 months. Clearly, the professional people, I'm talking professional rehabbers, professional real estate investors who fix and flip as a business, they usually can get stuff done a lot quicker because number one, their experience. Number two, they have their own crews. Three, they know what to buy and what to do, and they have this down to a science, which is again very important. Whereas your casual flippers, your mom and pop investors will probably take a bit longer to do. And again, depending on the nature of the business as well too, like are you doing cosmetic flipping or are you doing more structural things or things that require permits and inspections by local city and county officials? So all these things, basically engage the process to either make it lengthy or shorter, depending on the scope of your actual plan of what you want to do here. All right. FHA buyers purchase a smaller portion of flipped homes. So basically out of the 57,000 and change homes flipped in the third quarter of this year, 14.7% were sold to buyers using loans backed by the Federal Housing Administration, FHA, down from 15.3% in the prior quarter. All right. So there you go. And again, looks like a lot of FHA buyers are buying in El Paso, Texas, Roanoke, Virginia, Beaumont, Texas, Waco, Texas, and McAllen, Texas. So for me, just shows that for whatever reason, Texas, and these are not tier 1 cities, these are tier 2 and tier 3 locations. There seems to be a lot of activity in those locations of Texas. So again, cheaper properties are going to bring probably the FHA buyer, and which is fine. So, but again, just going to show where the concentration is. All right, and don't forget too, FHA has loan limits. So a lot of I don't see that many FHA buyers maybe buying in San Jose and San Francisco because of the loan limits may not work for that location with the high pricing points. All right. So now again, going back to this slide here. So so people are going to say, well, how do I fix and flip, or how do I get involved in this? Well, really, here's the deal. So professional home flippers, these are groups, these are either individuals or groups, partnerships, or teams of people, groups of people, bigger investors. They've got kind of machine. They know how to market. They're marketing to certain segments of the population, distressed property, stuff like that. They're buying at auction. They're buying before the auction. They're doing a lot of marketing to get a hold of the deals prior to an auction or prior to them going retail, which means they're buying them at a discount. So why this? Why is home flipping a good thing to do in the future? Well, right now, if profits are high and volume is low, that's fueling our current real estate marketplace. So if you've got a deal that you're buying at a good price, then chances are you're going to do well in the flipping opportunity here. If you want to buy and resell, as long as you understand what the future will hold with respect to volume and marketplace and inventory, etc. But the point I like to make is the fact that starting in 2021, it's actually starting now, but we'll say officially in 2021, based on all the information we're reading from real people with real companies and real data providers talking about the conservative number of foreclosures that will be available in the future, 1.8 to 3 million. So if you're getting your hands on these in some capacity, chances are you are buying them at a discount, whether it's before the auction or at the auction or as an REO, you're going to get them at a cheaper price. And then if you can do the fix and flip, you've got opportunities here. Or flipping, just sell, buying it and selling it, you're making money. Fixing and flipping, which is kind of what they're talking about, the home flippers, is obviously good profitability. We see the average is almost $74,000 now. If you want to do a cash flow rental and do the BRRRR method, perfectly available. Or if you want to just sell it to a retail buyer, you can do that as well too. So lots of opportunities if you're getting a hold of distressed properties to sort of move on these things here. So this is the model to follow. So I'm going to tell you exactly the process here, the best way to engage this right now. So this is what I'm doing, okay? We're looking at people who have imminent foreclosure auction. So in other words, they have a scheduled auction. They're going to lose their house, all right? They're not covered by any moratorium. It's going to happen. There's very few solutions. So what we're going to do is we're going to contact those people. And when we get a hold of them, we're going to run them through our we'll call it, script process, whatever you want to call it, where we run them through what we have to run them through to determine what options are available. In the end, we have to stop the foreclosure auction, which basically is going to help them. So we have our techniques of doing that. I'm not going to talk about them here. That's the special sauce that we have in our model. So we'll stop the auction, which gives them more time on their property. So saves them from being evicted and out in the street, losing their home and having financial issues. We're stopping the auction, buying more time, gives us more time to engage a short sale with the homeowner, which allows us to work over the lender and get a discount from the lender when we know what the lender's going to give us the property for. So it's, there's a whole process behind the scenes that we work this. We do what makes sense or gives us the best return, whether it's to flip it, whether we fix and flip it, whether we do a cash flow rental, again, with the BRRRR concept, what people tend to like these days and talk about, again, buy, rehab, renovate, rent out, refinance, repeat. Okay, that's what BRRRR stands for. Or so we figure out what we're going to do. We're going to purchase the property and we'll do what makes sense, or it's going to be a retail deal and you want to live in it as your primary residence. Either way, you're getting a better priced property because we're able to secure discounts from the lender because it is distressed in either a financial form or maybe some physical forms as well too. And we're leveraging that to get a better deal from the lender. So this is exactly sort of what we want to follow here. And I don't know why people don't get this. So you're going to say, well, how do I find these deals? Well, this is an example of what's happening right now. So I mentioned in some states, foreclosure auctions are starting to open up. And what I mean by that is properties are based on your local state, the local moratorium against evictions and foreclosure sales, depending on who's following what and what they're looking at, we're seeing things loosen up. So for example, this is Denver. I don't know if you can really see this here. This is public record information. I can find this on the internet. I looked at it right here, screenshot. So in Denver, in January 2021, looks like all their foreclosure auctions are happening on a Thursday. So right now there's 51, let me pull my, because I can't read that. There's 51 scheduled auctions in Denver, Colorado. Okay, and I think this is probably Denver County, probably. Okay, and this is right now. That could change. It could go up. It could go down. But the point is, I know that for example, on the date of the 21st and the 28th, those numbers could increase because typically what they do is they will 30 days out they may reset some auctions or schedule some auctions. So the last 2 days of auction, the 21st and 28th in January, could increase with respect to having more scheduled. All right. So right now, 51 mortgage foreclosures. So, for people who are in Denver, because I know a lot of people comment and talk about Denver and connect with me on Denver. Yes, it's expensive, but guess what? 51 of these homes will most likely be sold to third-party bidders or taken back by the lenders at the auction place. That's 51 potential deals for everyone out there. 51 people that we could possibly help stop a foreclosure, do a short sale, package them up, and have them have a better situation than a foreclosure. All right, so that's just something to think about. So this is just Denver, and I know that there's not a heck of a lot in Denver because a lot of people are just buying and selling. It's a higher net worth place out there, higher property value. So you're seeing, not as many, but it will pick up. But the point is, look, it's already starting. This is now. It's going to get more every month. All right. Next slide. This is Miami. Okay. Well, this is Miami-Dade County. All right. Now you can't really see it here, but I just tallied them up. So the blue boxes are the mortgage foreclosures. So right now there's 394 mortgage foreclosures scheduled to go to the foreclosure auction online in Miami-Dade County. All right. Now the last couple of days, like the last week, which is the, let me look here again on my sheet because I can't read that. All right. The last week, which is the 25th, 26th, and 27th, we could see those date, like the net auctions happening on those days increase as well too, because today the courts are setting auctions. On Monday and Tuesday, they're going to set auctions as well too. So we could see that increase. So we could have over 400 auctions in January for mortgage foreclosures in Miami-Dade. Those kind of orangey boxes there, those are tax deed sales. All right. So it looks like we have one on the 7th and we have 106 on the 21st. So you got 107 right now tax deed auctions that are also going to happen. Those are tax deed foreclosures in Miami-Dade County as well too. They're a little different than the mortgage. The tax deed auction is based on the fact that people haven't paid their property tax. So it's going to auctions the same way we would do a mortgage foreclosure auction. It's basic public opening bid here. Now, those will probably drop a little bit as time goes on because a lot of homeowners tend to find the money and redeem their sort of delinquent taxes before it's sold. And again, you have up until the day of to fix that. If you can pay your tax, your back taxes, they'll cancel the auction. But the point is, we're starting off with 107 in January, so I would expect there still would be a good 50, 60 by the time those auction dates come around. So again, the point is, are there 5 or 6 of these out there? No. There's 400, 500 sitting here right now that are targets for anybody to go after. All right, you can click on those days and you can actually look at the property address and see what's happening. All right, so the information's available. You just have to look for it. So, but the point I'm trying to make here is that, if I've talked to you before about this, if you've engaged with me on, some of the short sale stuff, whatever, if you've not bothered to reach back out to me or continue discussion, this is what's going on, guys. Okay, this is the opportunity. So I don't want to see people come, or I don't want to hear, not like I'm your father here, but I'm saying I don't want to hear complaining going, I can't find a property, or I don't know what's going, whatever, because it's available. Okay, they're there. You just have to maybe do a little more work and open your eyes, and stuff's out there. So there is hope. That's why I know a lot of people are suggesting that this is we're just going to keep going high. It's going to keep bubbling. It's never going to burst. Well, you know what? You can believe what you want, but this is what's going on now. So if this is what's happening now, wait until these other 1.8 to 3 million decide to come online as time goes on. Okay, it's going to change the dynamic of what's going on here. So again, the housing bubble boys do know what they're talking about. All right. Okay, so as I say, 2 housing narratives in play, K-shaped housing market. Housing market's stalled now. It's sitting here, it's tight, not much is going on, very little inventory left. So yeah, there's a lot of frustration. I get that, guys. I commiserate with you. I know what's going on out there. But there are properties available. You just have to know where to look. Now, when I mean they're available, they're not at the surface. You just can't call me and go, Randy, I want to get that property. Can you make that happen for me? Little different process here, but the point I'm trying to make is if you really want to get a better price property, if you want to get something to live in, to cash flow rent, to earn income as investment opportunities, connect with me. They're out there. I can show you how to do that. Okay, that's this, especially where we are in Florida, we're in the land of opportunity here, and it's just going to get more and more will happen down here and other locations as well too. All right, so as I mentioned, just connect with me. I got the model. It is what it is. And we'll figure it out. All right, guys, hit me up with the email, and we'll once again thank you for the likes, thank you for the views. Please share the video with your family and friends. If you're not already a subscription holder here, if you haven't subscribed to my channel, please help me grow and hit that subscription button and reach out to me with any questions, comments, or concerns. Have a great weekend, all right?